Good morning. Good morning. Welcome to the daily trade analysis. Today it's Wednesday, actually it's 21st of Feb 2024. You are actually with me, Yusuf, from the hosts of the Daily Money Markets. This is what we actually do each and every day. We analyze the trades, we look what exactly the opportunity we can find, and just trying to find, a small opportunity. To those who like to get in a forex market or to jump in a market to trade, they can be able, to jump in and, use the analysis and correspond with ours and make a decision to do what they want to do. But it's just to identify some few, opportunities that personally I'm seeing in a forex financial market. So without actually wasting time, as what we always do, today I decided maybe I should show you where we can actually, watch or see those high impact volatility news. All right. So what I need to do is actually, so if you want to see a daily highly impact volatility news, what you need to do, you need to go to Forex Factory, www.forexfactory.com. You're going to see all the high impact volatility news. Here, where it says red, if you can see, it says high impact expected. Where it's yellow, it's low impact expected. So we don't focus much on the yellows. We focus on the red is because of that's where we're seeing a high impact expected. So on Wednesday, Feb 2021, Australian dollar, they had a wage price index quarter to quarter, which is today, LAAM on a Sydney session. Later on, the biggest one that we're having today, it's a Fomc meeting minutes. The Feds are coming up, to give us the report about the interest rate. So this is what we're going to analyze our trade based on the Fomc minutes that is coming 9 p.m. in a 9 p.m. on ours, but it's a news from US. So, all right, in that case, now we can go on a chart and trying to see which actually, opportunities we can see. So first of all, already we are looking at the high instrument that a lot of people love to trade. It's gold, XAU versus United States dollar, gold versus a dollar instrument. So we already put our charts on a 1 hour time frame. The reason why we are daily traders, we can put on a 4 hour, but not really. I don't like really to put on a 4 hour. I like to put on a 1 hour and execute at a 15 minutes, right? So we can see it's on a 4 hour. The market drops for CPI. Yesterday we said the market is going to recover to this level. It recovers this level, pushes the price here, and we see all the way the whole night, it kept on going all the way up, right? Now, what are we anticipating about the Fomc news when they come 9 o'clock? Do we think the price of gold will go all the way to 2040? Personally, I think it won't go to that level. I'm actually anticipating that maybe gold can come and touch to 2012, right? Which is a move that I was anticipating, I think, last week, and it did come to this level, right? It didn't break. But if the Fomc meetings is going to be high impact in terms of the results, in terms of the Fed's results about the interest rates, if it's going to be, favoring, especially not favoring people if they say they're holding the interest rate, or we're expecting to increase the interest rate. But definitely the way things they're looking, they're going to say they're actually putting the interest rate on a hold, so that expecting maybe end of the March when the season starts, financial season for different companies, then they can start maybe decreasing the interest rate. But now, interesting part is that the investors, they don't have that much confidence in terms of the Federal Reserve report. So that is why we're anticipating that gold might be able to drop, right? Because of they're going to keep the interest rate on a hold, then the dollar, it might have, a high impact positivity. The more dollar is gaining the momentum or power, the safe haven of gold, it might be dropped. So 2012, it's your take profit number one. That's where you can actually, jump actually in. That's what actually you can put in terms of your take profit number one, somewhere around here, 2012. You can even put on 2016 just to be on the safe side if you don't want any type of retesting move. But once it get to 2012, we should expecting the price to go all the way maybe to 2000 mark somewhere there, 2007 or 2000 mark somewhere there. So I'm anticipating the bearish movement to happen for gold today, right? All right, not much in terms of news that drives the Brent oil. We see the Brent oil had a high, push all the way price down to $81 per barrel. It was sitting at $83 per barrel, and it pushes the price to $81 per barrel. I'm not sure that affects it. Is it by the geopolitics that is happening in Gaza, Middle East, closing the Red Sea, and so on and so forth? Or is just, the Opel companies or the biggest oil companies trying to push the price on a very, very good competitive range. So in terms of the Brent, we're not going to really pay attention on Brent oil, but we can pay attention on the Euros because we're about to see the European Open session starting at 10 o'clock, Euro USD. We are actually, again, anticipating a Euro USD to, push the price all the way to drop because of, again, the Fomc meetings that are actually, that are going to actually happen. So, of course, maybe to recover to my trades that have been on a loss for a couple of, a day or so, maybe to come to somewhere around there, pushes the price break in, but the high possible position to make a good profit or where we think Euro USD can get it's 1.07445. 1.07445. This is the area that the price can push. Break here, comes all the way, retest at this position. So that's in terms of Euro USD. Again, I saw something about German 30 in terms of the the news, German 10-year bond auction that is coming. We might anticipating because of not really a lot of things has been actually happening in German, and that 10-year bond is not the highly impact news that brings a highly volatility in a market. So we're anticipating a little bit of a drop maybe for a German 30, but it's been having crazy volatile. I think it might be pushed the price maybe just somewhere around 17,043. 17,043. I don't think it will actually, go above where it is. I think it will push the price to 17,043, and actually that's a short trades that you can actually capitalize. By the time the the European session open, you can actually jump in and check on that. So yeah, that's German 30. Again, FTSE 100, we also look into FTSE 100. This instrument has been having a very, very, very crazy, movement for past a week or so because of the battle between the Federal Reserve from US, which is the Fomc meeting that are bringing today, and the Bank of England that also brings the interest rate of Europeans or on GBP or in England. So when we look at UK100, which is we call it FTSE 100. Let me just remove maybe some of this. Okay. Maybe again pushes the price down to somewhere exactly on 7,707. But if you look at it, this is the high possible position that the market can actually, drop. So I think it's a bearish movement to 7,707, but it might get also to 7,669 as a biggest, target that you can actually find on a UK 100 when you trade it today. Why are we saying this? Because of the Fomc meeting. If they're going to come, definitely they're not going to say that they're increasing the interest rate, or they're not going to say they're decreasing the interest rate today. But we are having a confidence to say they're putting on a pause based on the results that comes, for past week. We saw last week, NFP surpassing the number of the target or estimated. We saw CPI, again, consumer price index, surpass the number of estimated. We saw producer price index again, you know, so it means people, they're getting at least employed. Consumers, at least they're, you know, spending money in the market. Producers, at least they're making, money in the market. So why would you increase the interest rate in that situation, on that condition? What do? You put it on a pause. So you gather all these, you know, funds that are coming or data that are coming. Then you're going to use it for the following month or next 2 months to start reducing, you know, the data or the interest rate. So that's what I'm actually looking at. Lastly, let's just go check two biggest instruments. Maybe also must check S&P 500, because S&P 500 made a history. It get all the way, it was around on 5,049. That's what S&P 500 has actually, you know, performed. But since then, we saw, you know, trying to recover. It drops with the CPI, but it tried to recover. But again, it kept on again losing the momentum. I think it's because of the bank holidays that they were, you know, happening in America from Monday. And again, I saw Nevada company, which is also listed under S&P 500, having a very, very, very low and you know, in a very long time. So their earnings, they're preparing to drop the earnings in 2 days from now, but the sales already, they're declining in terms of their numbers. So that's what I see in terms of Nevada. And Nevada also is a part of biggest manufacturing company in terms of automobile cars, but again, it's part of S&P 500. So we're seeing the drop on S&P 500. S&P 500 dropping all the way down. And again, if we look at a US30, we are anticipating the same today, coming all the way to 38,030, pushes the price down to 38,030. So my anticipation today is just a bullish. Only NASDAQ, I think it will go bearish a little bit. I think it will push the price to 17,841. So that's for NASDAQ. That's what I'm thinking. All right. That's all what I actually, you know, prepared. It's actually quick daily trade analysis that we can see what's going on in the market and just look at it and think, you know, and analyze where the market is coming from, depending the data that has been dropped for past a week or so. So thank you very much for tuning in. Keep subscribing and share with other friends.